Welcome on board Vinay Rajani to talk about what he's reading on the charts right now. Vinay, hi, afternoon. Let's talk about some of the underperforming sectors. Metals, IT, both extremely beaten down. Today, of course, they are seeing a rebound. But does it seem like it's going to last long?
Yeah, good afternoon and thanks for having me on the show. So yes, IT is obviously into a downtrend. It has made an attempt to recover from the lower level. But yes, there has been some signs that overall, looking at the ratio charts that we see. So if we do the ratio analysis of Nifty IT divided by Nifty, that ratio analysis says that Nifty IT has reached to the long-term support and anytime soon it could find a bullish momentum. So as of now, there is no confirmation of bullish reversal as of yet. But the way things are panning out, the way market is sustaining at higher level, sector rotation will be there, and the sectors which they have not performed till now can participate in the coming days. And talking about the Nifty IT index, 33,800 is a level to watch out for the Nifty IT index in this spot. So once that is taken out, we can expect a good amount of short covering in the IT stocks, and that will also participate. So I feel that this is not the right time to short the IT stocks. In fact, one can start accumulating the stocks because they are looking quite oversold, and ratio charts are suggesting that it could soon find its ground and will start outperforming the other sectors. So this is the time to accumulate the IT stocks, and metals are quite volatile. Metals have bounced back nicely from the lower level on the back of news. But yes, overall, I feel that on dips should be bought into because overall the falling dollar index is a good sign for a metal sector. So that is going to provide support at lower levels. So buy on dips can be done in the metal stocks as well from here.
All right, so buy on dips, that's a strategy one can adopt when you talk about the metal stocks from here on. But Devin, I wanted to get your view on the realty space, one of the top sectoral performer in today's trading session. And looks like the tide is turning in favor of this particular sector. What's your view? How should one actually view this one? And should one actually go ahead and invest 5% up move in today's trading session?
So as long as the valuations are affordable, I think this particular space remains absolutely convincing and attractive enough, largely because of the fact that both on the low-cost housing side as well as I think the premium housing, in the entire spectrum, I think the demand scenario remains upbeat and buoyant. And should the stock market remain comfortably at current levels, probably, I would think that the demand for the premium real estate, I think, would remain relatively on a higher side. So that's where probably I think the participation of some of the real estate developer companies, I think, who are basically focusing on the premium properties, that remains, I think, relatively high at this point of time. We believe that as long as the valuations do not scale up in hurry, I think this space would remain attractive enough for considering at every correction or at every fall in the market.
Okay, that's the take coming in on the realty names. In fact, let's bring up some of those realty winners today. I mean, everything from a Loda, Macrotech developers, that is, to a DLF, all these stocks are on a tear, and even the smaller players are the ones which are holding up very nicely, the likes of a DB Realty, etc. as well, looking very, very smart indeed. Kunal, any trade here within realty?
Yeah, DB Realty is something which looks attractive. I think the stock is having a very fantastic kind of an uptrend over the last few months. It's risen up from, I think, if I'm not wrong, 140, 130 levels to now on the verge of breaking the 200 mark. Excellent volumes for the stock, and it looks like that it's now trying to come back into the previous high breakout mode, which is around the 230 to 240 mark for DB Realty. So I would expect at least another 15 to 20% upside over the next 3 odd months for the stock. And then you have fresh breakouts which have emerged from the other pack. I think Oberoi Realties, for example, is the other name which is looking attractive. The stock confirming a minus swing breakout in the short-term charts, and it's now coming back into a retest of the previous moving averages, 50, 100 as well as the 200 moving average for Oberoi Realty. Then Loda is something which is looking attractive. In fact, the stock has been in a range in the last 3 odd months where you've seen many of the real estate stocks falling very sharply. So I think there are a lot many opportunities which are opening up in this sector.
Right. One of the spots that actually looks also, one can actually merit to look at is the aviation space, Indigo. That one has actually hit a record high level as well in today's trading session. You have MOSL upgrade coming in for that particular counter, where they're expecting the target to hit, they have a target of about 6,550, which actually is the highest on the street coming in for Indigo. On the charts, Vinay, how is Indigo looking to you?
So after giving breakout, the stock has risen a lot. There is no fresh breakout as of yet. No doubt it is at the all-time high, so trend has been positive. But at this level, risk-reward ratio is not favorable because after giving a breakout, so breakout level was around 4,700. After that, it has seen only 600 points rise. So existing long position can be held with a trailing stop loss, but new position I think should not be taken because risk-reward ratio is not favorable and it looks a bit overbought also. So rather than buying at this level, one should wait for support levels to come at the lower side and then only one can think of it. But otherwise, I would rather look at the stocks which have just started performing in this market, and there are many options available in the F&O as well as the large cap space. So I would hold the existing lot, but not I will not prefer this particular counter for taking fresh long positions.
Okay, already at an all-time high. That's Interglobe Aviation. Let's bring up some of those names from within the hospitality pack. You've got IHCL as well, which is only about 50 odd points away actually from its 52-week peak. That I think of about 890, 895 thereabouts. But Devin, what's the best way to capitalize on the entire travel and hospitality boom now that Interglobe Aviation is a quasi play on hotels too, with its with its tie-up with Accor?
Well, I think in my viewpoint, most of the companies within this space, they are adequately priced. That is not taking away the underlying prospect that they have. I think they remain absolutely robust and firm. But the valuation wise, I think they are fully priced in my viewpoint. So unless we see meaningful corrections available, either you buy with a price correction in a given market situation, or you buy relatively, I think after the time correction is completed, then probably I think it makes more sense to buy into the portfolio. As of now, I believe that I think most of the stock in the hospitality sector are fully and adequately reflecting the valuation at which they are quoting currently.
Right, point taken. On that note, thank you so much, Devin, for joining us on the show to give us a take on the sectors that are looking attractive at this point in time, also sharing your rationale for the market. But Kunal, before we proceed, what's your closing trade for our viewers?
So the insurance stocks have started to look very attractive, and SBI Life is something which I would pick at current levels. I think it's a very strong chart, a classical swing pattern breakout in the weekly time frame, as well as a 200 moving average breakout potentially for SBI Life. So looks extremely attractive and would look out for a swing upside of at least another 5% to 7% over the very short term.
All right, that's SBI Life coming in for Kunal. What about you, Vinay?
Go for Patanjali Foods. So stock has given a breakout, symmetrical triangle breakout on the weekly chart, and it is on the verge of registering its new all-time high. So trading around 1920, it's a typical textbook symmetrical triangle breakout. Looks very strong on the chart, and while markets were weak, it was quite resilient, and now it has started participating and breaking out from the consolidation. So 1920 is a level where Patanjali Foods can be bought. 1770. So this is a positional idea I'm suggesting, not for 1 or 2 days, but yes, for next 2 to 3 weeks, we can think of positional gains here. So 1770 should be the stop loss, and on the upside, we are giving a target of 2145. So this would be my first pick from for a couple of weeks, we can say Patanjali Foods.
Okay, that's a buy call coming in Patanjali Foods. Let's take a very quick break. Look at IREDA, Inox Wind, PNB Housings, not PNB Housing as much, but yeah, Inox as well as IREDA, and of course Bharti. They're quite the star performers today, seeing a fair amount of OI build up as well.
If you like this video, then like, share and subscribe to ET Now.